Good evening, traders. Welcome back to our daily Forex focus. On today's episode, I'm going to talk about more about FOMC meeting and the rate cuts and what we should expect going forward. Right, the impact it has and everything, and we are going to look out for how price actually deliver in today and what to expect next going forward on the pair we definitely talk about every day. So yeah, I'm going to say this again. If this is the first time you're stumbling on this channel, then you are highly welcome to this channel, and please do a favor to subscribe and comment or like this video so as to help my video reach out to more viewers just like you. So if you think this video helps you a lot, if you think it helps you on getting to know where your next bias is going to be, then please subscribe to this channel and let's see how price is going to deliver according to what we talked about. But then let's dive into the chart. On today, we're starting with dollar index as usual. So this is the US dollar, and I'm using capital.com. So in case you want to have a similar chart with my own, you can use that PS2. You can use that broker too. So today we see that the FOMC, the rate cut was 25 pips and price delivered lower, taking our previous month or our monthly candle range low. We all know that this is our monthly candle range high, which has been taken, and we have been trading all this while aiming for this monthly candle range low, and successfully today price gets to that level. So now we sweep it and price shows a decline back into the range, right? So that this does not mean that DXY will definitely become bullish, right? Yeah, we have to confirm that how by Thursday and Wednesday, sorry, by tomorrow, which is Thursday and Friday trading, then we will now on confirm if price is going to if it's going to be bullish now or we are going to continue bearish. But have this in mind is that even aside from this monthly candle range low that we've been targeting, dollar index has been going lower for a long time now, and we can still expect a continuation lower in price. But now, maybe before price continue to go lower, we might have a liquidity run before then. But if you want to know more about what the future holds, I will definitely tell you this. Come for our weekly forex forecast, which is coming up on Saturday this weekend. Yeah, it's coming on Saturday this weekend. At least then I can go on a weekly time frame, and if for certainly the monthly time frame, so we determined our new major bias. And now we are going to be able to be sure what we are going to look out on a long time for the dollar if we have seen how Friday, tomorrow, Thursday, and Friday did before we can actually have a concrete um ideas for continuation in price. But yeah, with the US economy, I think they are trying to revive the whole thing. And for now, if what they are trying to do is going to be effective, for now we might see a bullishness in a short time, not over long time bullishness. We might see a short time bullishness on the dollar, right? But according to the news, but we need to see the confirmation on our chart on Friday, from tomorrow to Friday, then we can now actually say, okay, this is what we are going to do. Since we already seen our previous day low has been taken and our monthly candle range low has been swept, we see how price delivered here. Now on dollar index, it is very clear, meaning that the dollar index actually has created a key level here if we are expecting, because tomorrow with how we deliver today, I'm anticipating for tomorrow to be a continuation, which is a continuation higher on dollar index, which is going to imply that we're going to see a bearish move on euro. And on the dollar index, we have a bearish order block here, or a bearish 4-hour key level order block, right? So we can be sure that this H4 key level can affect price and lead to a continuation price lower. So we're going to anticipate, maybe according to what the session is saying, during the morning session or the London session. And if you want to join my Telegram community where I share this trade for free, no monetary value added to it, if you can go to this channel board, because yes, they are not still allowing me to add link on my video description. So you can go on the channel and you will see my Telegram, Twitter account, and yeah, YouTube for say. So you're gonna see the link there to join my Telegram channel, and let's write continuation, or let's trade together and see what is in store for us. Yes, as you can see, my channel is currently new and I'm building up, and also using this as a journey for myself and reading my trade daily like this help me develop. And if you've been with me for so long, for a while now, you know that my prediction is very okay. So that is all I have to say. But on the dollar index, we've seen that we have a liquidity run down here, which is previous day low taking, right? Since we've taken our previous day low, then we are looking out for price to continue going higher. But if we open, I'm anticipating for the opening price to get lower here, then we use this key level, this for our fair value gap, as our key level to seek for continuation or higher prices on higher prices on the dollar index. So, and this should reject the dollar index to go lower. So let's say the move higher will be the London, then the New York will deliver lower, but not to all the way back to this low. No, the previous day low, which is day candle lows on DXY, is not is not an area of target, but we can see it deliver into here and we come back. And today is probably, which is tomorrow, is likely to be an insider day candle. Sorry, not an insider day candle, because it's going to take on DXY, it is going to take previous day high, but it's going to be a lower range candle. And on the daily time frame, we see that the price has actually have a fair value gap, which the market is likely to fill completely, not to use it to continue going lower. So on the lower time frame, the hourly time frame, this is why I still anticipate for higher prices. One, on the lower time frame, I'm going to take this out of the chart, but this is what we use on the euro US dollar. This fair value gap has become an inversion fair value gap, but since the fair value gap is close or above our 4-hourly fair value gap, we are going to take it out and leave the 4-hourly fair value gap. And what do we see here? We have seen a change in the state of delivery, right? A change in the state of delivery, and price is going higher. So because of this change in place in state of delivery, we are anticipating for price to retrace back into here, then use this key level, or even this um, breaker block. We have a breaker here, these up close candles, these two up close candles is a breaker, then maybe taps on that breaker before going higher. And this high, this candle high, will be our smaller time frame or internal liquidity draw on liquidity as the buy side liquidity for price to easily and very sweet area for price to hit in tomorrow trading. Right, this is just it on DXY. Mainly, you should focus on how price is trading during the range, or if we wake up and see price already trading around this area, then maybe London can retrace back, take the Asian low, then New York will take London low and go higher, right? But it depends on how the London and New York is trading before we can actually, you know, support our buyers to continue going in specific direction. But this is an overview of what we can expect on the dollar index. So that being said, let's go to the euro US dollar. Now on euro US dollar, we have already taken our previous month by candle range high since yesterday, but the dollar has not. Now you see the correlation in this is the SMT divergence already. We create higher high, although it still create a higher high there, but the highness of this one is very higher than the dollar index, right? And we're going to confirm it more with GBP, right? So I'm going to explain that when we get to the GBP. So this is an SMT divergence between GBP and euro. GBP has not yet taken this high, so this is an SMT divergence. And if you look at this particular rejection, it has also tapped on a higher time frame, right? Higher time frame CB, which is sell side imbalance, buy side inefficiency, or a bearish fair value gap, which is very easy. So we have already react or taps on it. There's no reason to expect price to go for previous day high, but previous day low is very sweet and easy target. But we're going to see a retracement. How far can we expect a retracement into this today range? But on a normal circumstances, when we have, especially when during this period of this kind of move, there is likely a chance of having today candle deliver, the week deliver all the way to this high, right to the opening price of this particular of the previous day. All right, but notwithstanding, we're going to see how price is reacting during our session trading hours or during our trading hours tomorrow, right? So we've seen that the price delivery for today on the 4 hourly time frame, if you look clearly, on the dollar index, right, we quietly have a a bullish fair value gap that supports continuation of higher prices on the dollar index, but we don't have that on the EU. But what we do have is our bearish breaker. Here we also have the bearish breaker. So yeah, the bearish breaker and order block. So I'm anticipating for that order block to support lower prices. And we have this area. This is the best target here, which is a fair value gap. Is a fair value gap, and I use I, which is this sticker, the I sticker, to, yeah, on this black candle, this I sticker, to annote that that is where I'm looking out for, which is the fair value gap is where I'm actually looking out for mainly. So price is more likely to come for this low, and this particular high range candle, which is yesterday candle, and which was the candle that we traded to the 50%, despite though the market was not willing to give us that during our trading hours because price was choppy and not moving fast, but it did goes there, but it took a long time, so which is not favorable for a smart trader to keep being on it. But yeah, we price did get here and fall short of the low, so the external range low, this will now become the external range lower time frame or external range low, which will now become easy target. But this is my main highest expansion for tomorrow, since we have a 4 hour, which is H4 order block here, and also we have the daily and daily fair value gap and daily order block as a key level for a bullish price, but I'm not sure this is going to be effective to continue giving us higher prices. If that's the case, that means the dollar will continue giving lower prices. Just like I've said, we don't have to worry about that until Friday, Thursday, tomorrow, Thursday, and Friday has already delivered, giving us what is important. Now, on the hourly time frame, we have a bearish breaker, which is this bearish breaker OB, this up close candle, they are bearish breaker, and very shorter block, but the breaker is more important. And we have this inversion fair value gap, just like we have on the dollar index that I took off. We have this inversion fair value gap, but there's no fair value gap on this. But yeah, these two PDRAs, they are all key levels, level you can look out for on EU tomorrow, and see how during the session, see how price treats these key levels, because the way price treat it will now determine how we move. Now, if we look at, this is our sell side liquidity, right? This is our sell side liquidity, and the area I've put in the eyeballs, that is my eye is just looking at this area very vividly. So I'm going to be looking at how price is reacting off of this area during our trading hours. If it give us an opportunity, then we're going to take a trade, hope take a trade for this short, for a bearish move. So if we go on the 15-minute time frame, right, I don't like to come all the way lower like this on the DXY, but let's just do what we have. Sweep liquidity, we have a down close candle like this. Now, imagine if you are trading news, right? This is what I used to tell my guys. You just wait for 15 minutes after the news. This 15-minute candle was the news, which is 2 p.m. The news comes out, then 2:15 p.m. you shouldn't trade, right? But I didn't trade today FOMC, right? But if I'm trading news event, like I have the intention of going in for a news event, I want to wait until the news completely delivered. That means a 15 minutes later after the news before I even anticipate for a trade, because we've seen that there is liquidity line below here, and what we have, this is where area we have been looking for price to take, and price has refused to come all the way lower, and the news become bullish, moving fast. And if you also check the dollar index, it has taken the major sell side liquidity, and now there is a retracement higher. Then the next 15-minute close have a down close candle. That is complete what bias for you to actually take an entry and ride on for profit. And this move was very sweet and lucrative, but nah, I don't trade news. It's against my rules, so that's just it. So on the 15-minute time frame, we still have our inversion fair value gap here, and we, what do you see here, an order block, because it breaks below here. This is a swing low that's broken by this 50-minute candle. So this bearish order block already taps on the bearish order block here too. So this bearish breaker, so price is likely, more likely, because we have so many things supporting this bearish move. All right, and look at this particular price here. Sorry, look at this particular price here. After the fair value gap, if you trade this, will be, this could have been a very sweet trade for you. All right, this particular one here, easy 20 pips. You know what we look for, 20 pips daily or per session, right? If we get it in London session, then we might, if except the New York session is showing a good trade, we might not take it during New York. But if we find 20 pips during London, 20 pips during New York, that's how I trade. And yeah, this is easy target, right? But anyway, that is it, by the way. So we going to, when we wake up tomorrow, we're gonna anticipate for where price is going to go, and whatever price did, then we're going to use that. But tomorrow we are bearish on the on EU and bullish on the dollar. That is my main draw on liquidity, but I'm going to work with what price is giving me, not impose my will on price. So similarly, we've come to finally to the dollar index. Now, why should we support that the EU or GBP is going to continue? Sorry, let me go back. I'm not supposed to take that off the chart. Now, this is where it gets very interesting. The dollar and EU has already taken their smart money divergence, right? Oh, SMT, bullish SMT. So I'm trying to put this up. Okay. Now we've seen that this is our smart money divergence. Now, since the dollar and EU has already given us signs like this, right? The dollar and EU has already taken their buy side, so there is no reason to be continue expecting that GBP will continue to come higher for this. That means the buy side distribution is off for GBP already. All right, and now we can continue to expect lower prices. Now GBP is going to have a very sweet trade tomorrow, right? Let me take this off the chart. Why do I say that? We're going to see a very sweet trade tomorrow on GBP. Reason be that we have this fair value gap here, so GBP is likely to extend very low. So, like during our session trading, I'm going to share this trade on tomorrow. So we have a daily fair value gap here, daily FVG, which price is likely to get into, right? So we have a very sweet expansion to anticipate for tomorrow on GBP, and this is GBP long time order block, right? If we respect this order block, then it should be enough to take us all the way above this monthly candle range high. But for now, we want to wait to see how Thursday and Friday deliver before we can actually say, okay, we are going to have a continuous bullish price. So this is just it on the daily time frame. Wow. So please support my growth, right? I'm pleading support my growth, push me higher by just giving me a reaction on my videos, comment on the video so that the algorithm will help us push for more viewers, all right, for more content, for more people that want to know where the market is going to go, and they need a video like this, just like the one we're doing here, so that the algorithm can push my videos to them. Depend on the reaction. So please like this video and react, and God bless you. So continuation, we have our breakers here too as well, and we have bearish order blocks, which is bearish breaker. And on the 4-hour contract, we have this fair value gap. So there is two things that is likely to happen. We might trade higher, react to this bearish breaker, then price lower into this daily fair value gap. Why is it likely that this order block is not going to have effect? Because we have an inefficiency below the order block. When you have an inefficiency below an order block, then there is high tendency the order block might not hold price, especially when you have a higher time frame order block above the above or below your or the below the order block, like this, with just what we have here. So there is a high tendency this is not gonna hold price, but it's going might have little effect during this session trading. And of course, this fair value gap, the daily fair value gap, will be our major area of target. So if we go on an hourly time frame, we see what we have here, where we don't have an inversion fair value gap, but we do have our bearish breaker, which is this bearish breaker here, and we're anticipating for price to recoup this area. Now, how far can we go? If you use your bar tool, you use the high, the body of the candles, because of this week. Now, why will I use the body? Because of this stupid week. So there's no need to be looking at the week. If I disqualify the week above, I should disqualify the week below. Now, if we use this, then we have our 50% around this area, which is around our bearish breaker. So that should be enough to hold price. So this is just it for the dollar index, sorry, for EU. For GBP, you see dollar index and GBP is on my mouth for real. So since I am talking about trading this pair tomorrow during London or New York session, if it actually shows a good signal or scenario, let's talk about the 15 minute, right? All right, on the 15 minute, we have a bearish order block here, which is very close to the current trading area. So basically, I'm anticipating for Asian to be a continuous ranging price. Then London will sweep Asian high and also give us a signature in price that shows that price is willing to go lower. Then we are going to continue to seek for lower prices. And that is just basically what it is for the dollar index. Now let's go to Bitcoin, right? Let's go to the daily time frame. Whoa, this is amazing. Look at Bitcoin, guys. We see that Bitcoin has yesterday we talked about how Bitcoin is going to continue higher or lower, right? So we actually see a very a very long wick below. So what is this telling us? This is telling us that Bitcoin is like more likely to continue higher prices, more likely to continue higher prices on the daily time frame. And yeah, price is going higher and we're going to continue to seek buy side liquidity. Then this liquidity will be the highest for this week or this particular one, which is actually having a relative equal highs. But I'm not going to trade this thing until I have a full confirmation that there is higher chance of BTC coming all the way to form a new all-time high. Now, don't forget, despite we have all this in price, like I keep saying to you guys, ever since I said until price break below this area, we've seen that BTC has been on a range high, range low. We take range high, come for the range low, now we'll go back to the range high. So if price, depending on how we close today, we might see a continuation in price higher or lower. This is going to be mainly or fully determined by Thursday and Friday price delivery. We can't really say if it's going to be continuous bullish or bearish. But since we are still between this range high and range low, then there's still a higher tendency that price might sweep this range high and come for the range low, or have a change of character, or have a continuation in price. But anyway, we should just keep our eyes on this area. And let me go on a lower time frame just in case someone wants to trade Bitcoin. Like I do, for now, if you want to scalp Bitcoin, right, you can though, because ever since I keep saying if you buy here, you take profit above this one, you could have taken something, then you will have to wait for all this to have a liquidity sweep above. Then you, after the liquidity sweep, you take a sell and target this low, you could have taken something. After the low, it comes back to the support area. We did not have anything good here, but again we tapped on it and yes, we come for this high. This is a good buy, a good sell, right? But can you be able to, you know, be able to mark it out like this thinking it's going to continue? You cannot. Don't lie for yourself, you cannot. And that is why sometimes you need to have something we call if and or don't. statement or conditional statement, right? If this is the case, then I will do this. That is a conditional statement. You are subconsciously telling yourself that until you see this before you do this, or if you see this before you can react. But if none of it occur, then there is no way for you to react. And that is what every trader needs to have. So this is basically bring us to the end of our video. And yeah, as you all have seen, how we call out price on a steady and how price is delivering with us on a steady basis. So if you find this video helpful, please do subscribe to this channel, give us a thumbs up, and God bless you. So let's see you tomorrow and Friday, or this weekend, most importantly this Saturday.